successfully expanded from 2 to about 12 African countries.
Hi, Tim. Good morning and welcome. Can you please introduce yourself and your company, FINCLUSION?
Yeah, thanks for having me, Ryan, and a pleasure to be here. So my name is Timothy Nuy. I'm the CEO and founder of FINCLUSION Group. My background for the past decade or so has been African financial services. I worked with a company called ADC African Development Corporation initially, where we bought banks on the African continent, and we sold that to Bob Diamond's Atlas Mara in 2014. I then joined a micro-lending group. We successfully expanded from 2 to about 12 African countries, 5 of which were deposit-taking. We scaled that to over $200 million and listed it on the Frankfurt Stock Exchange. And in 2018, I started FINCLUSION. And FINCLUSION was still with the goal of really addressing the prevailing credit gap in sub-Saharan Africa, where credit remains a barrier for many, and not just those that are living on $1 a day, but even people with affordable income and ability to actually sustain credit aren't able to access credit. So for us, we really want to offer access to basic financial services. We focus on creating affordable lending instruments for productive purposes to really, stimulate economies, but also stimulate and improve personal lives. We started off with the tech, and since then have built out distribution businesses in currently 5 countries in Africa: South Africa, Swaziland, Namibia, and Southern Africa, and Kenya and Tanzania and East Africa.
That's awesome.
And we've grown the business over the last couple of years to just over $20 million of loan book where we stand today. At the moment, we're mainly lending, a little bit of insurance, but we intend to expand and really offer a full suite of financial services to also give people savings options, card options, and other payment solutions.
That's awesome. Now, are you from Africa yourself?
No, I'm originally Dutch, grew up in the Netherlands, studied in the Netherlands, worked in restructuring for a while in Germany, and then sort of ended up in Africa by chance. But I think the entrepreneurial nature of the continent really appealed to me. And me and my family, we live in Cape Town. My business partner, Tondorai, is based out of Nairobi. So between the two of us, we have a very good coverage of East and Southern Africa.
Now, can you explain to me, I think you kind of already explained it already, but can you explain to me more in depth why Africa specifically for FINCLUSION?
So I think, the credit opportunity is tremendous in Africa, and I'm sure that applies to the rest of the world. But I truly believe in initially regionally scaling financial services. What works in one country is likely to work in a neighboring country that still has many similarities when it comes to legislation, systems, adoption of certain levels of technology, but it may not work in other areas. And most importantly, operational staff, it's hard to basically, have them operate across multiple areas if there's big differences in time zones, if there's big travel times. It just becomes relatively costly. I had personal experience in Africa, and then that's basically, where I saw an active opportunity, was passionate about, and wanted to address that. And I mean, it does help that we can do a lot of it in the English language. Obviously, to do the same in Latin America, it probably would be helpful if one would have spoken Spanish. So I think that's probably the why Africa. I also think the African opportunity by itself is big enough. I'm always skeptical of businesses that open up in one continent and then their first expansion country on a B2C platform is on the other side of the world. It kind of made you question if there was an opportunity in the original market to begin with.
Yeah, well, in Africa specifically, fintech has exploded, specifically in 2021. It's huge. Now, can you explain to me how your AI program works?
Absolutely. So we basically, really deploy our AI on the credit scoring side of things. So where we believe we're better able than most to grant credit. When we grant credit, we look at 2 things. We look at the ability to repay and the willingness to repay. The willingness to repay, we can further augment it with collection methods. So we strike bank accounts, we pull repayments. Sometimes we do partnerships with the employer, where the employer pays on behalf of the employees. And the willingness of
Wow.
repay is where also psychometric testing comes in, some geodata, we look at social media, but on ability to pay is where we really look at income and expenses. And that's where a lot of our AI also comes in, is where we dissect transactional statements. We automatically label and allocate payments in and out to different categories. And we then basically create a personal income statement, and we map out that income statement for a potential client to what's sort of the standard of, for that market to assess credit risk from an affordability basis. But on top of that, we use the spending and the income to basically assess features that can play a role in establishing credit worthiness, because the quantum of someone's salary that they spend on certain categories will go to speak on the type of person they are. What they do with money they borrow in a similar way does that as well. So it helps us to further augment the scoring. I think in everything we do, we really try and take every piece of information we can get, because everything helps us refine traditional scoring models.
For sure. Interesting. Now, what is financial inclusion, right? That's your own business model. What does that mean to you specifically?
So I think what it means to us is not getting people, bank accounts or registered. It's not about, just ticking boxes and adding up numbers. For us, financial inclusion is about actually fully including someone in the financial ecosystem, which is not about opening an account, but it's about using an account. It's about getting access to credit. It's about getting access to insurance. And that's why we started with credit, because that's where we believe we can really transform lives. So for us, it's not about the quantity of the count, it's about the quality of the impact one makes. So in many of what we do, one can say that we really focus on the underbanked more so than the unbanked today, because our credit solutions are really aimed at people earning, say, north of $200 a month. But even those people do not have access to quality financial services today. So it's our definition of financial inclusion is a little bit beyond the traditional, definition of just getting people a bank account and officially entering the system. It's about actually getting them the products they need.
Interesting. Now, how best does FINCLUSION accelerate financial inclusion in Africa?
So I think the best way to do it is keep giving on more loans, but making sure that it's fair with financial education and information. It's important people understand why they're taking a loan, what it makes from a repayment perspective, so they can use those loans for productive purposes. I've always been a skeptic of nano loans, because the problem with nano loans, in as much as, the theory is you give someone a $5 loan, if they repay, you give them a bigger loan and a bigger loan. If they haven't created capacity in that time, you're really just playing a game of musical chairs. And in the end, someone is going to be, left without a chair, having a client that created a loan that kept on going up, but where the money that they got was just spent on random non-productive things. And they wouldn't have created any wealth for anyone except for all the lenders that weren't lost. Where we come in, we focus on installment lending. So we believe that we need to find ways to give people loans of 6, but ideally 12 to 24 months, so that based on their affordability, with a smaller amount taken from each paycheck, they can actually generate a substantial amount up front and use it for productive purposes, be it school fees, be it a car, be it home improvement, but tangible items that will improve their livelihoods and that of their dependents. So I think that's the way we believe we can really, drive financial inclusion, aid people and grow. And I believe there'll be a snowball effect, because you'll get positive references and as a result can grow with them.
Awesome. Now, can you walk me through how your credit-led product works?
Sure. So the philosophy of it is we distribute through partners. So it's either employers or merchants predominantly. Employers will lend to their employees. Merchants, we either lend to the merchant or their clients. So at either of those two channels, we use the partners to drive marketing to keep our direct marketing spend low. And through the referral, we'll effectively get someone for a loan application. We then get that loan application in, we verify it, we score it. If we decide to give a loan, we now onboard the person into our ecosystem. They now have gotten the first loan. That's when, from there on, we try and cross-sell our insurance products. And that's where we're currently looking at also opening up savings and insurance, so we can cross-sell further products. The next key product for us is launching a card in our markets, because that means once someone's taken a loan, we can offer them a card and say, whenever you make a payment, rather than it going off your bank account, you can just draw down on the loan. So that's why card is a critical component in that strategy.
Interesting. Do you work with any banks in the area?
No, at the moment we do this ourselves. So we basically run off our own balance sheet. It's our own risk. That may well change in future, because obviously there could be a time where we prefer to, grow without having the continuous need to rely on our own balance sheet. But at the moment, to keep it simple and to be able to fast track our growth, we've really focused on leveraging our own balance sheet for our growth.
Are there any downsides to utilizing credit in this way for your clients?
So ultimately, I think there's two things. So first of all, a client's responsibility to what one does with the money is ultimately a client's. If you take a big loan and you spend it all on something unsustainable, you still end up paying for it. But the big advantage is if you give someone a small loan, the only choice they have is spending it on something unsustainable, because there's not enough money to do something productive.
Yeah.
So that's probably the big downside of credit. I think otherwise, if used responsibly, it really just has upsides because one creates capacity. Although, I think in general in the African continent, a savings culture doesn't really exist. So for people, taking credit is actually a mode of saving, because if you take a loan and you buy a car, at the end of the 24-month period, when you've paid down the loan, you own a car. And although that's not cash saving, you've actually used your income to save. Now, if you would have basically gotten people to try and put money in a savings account each month, that most likely wouldn't have worked, because there's always people to support, emergencies to attend to. So the cultural composition of the continent is different from what one sees in Europe, for example, where people just put money aside in a savings account and never touch it. So I think that's where a big opportunity lies.
Yeah, no, it's interesting. Now, are there any interest rates tied to your credit and loan business, right?
Of course, yeah. So basically, we are competitive with the banks.
Okay.
If you sort of look at a lot of the nano lenders, they'll get as high as 20 to 30% per month. Our APR is at about 58% per annum. That might still sound high from an international viewpoint, but it's the reality is it's unfortunately local currency, and it's currencies that also lose value against the US dollar. There's significant credit risk we're incurring, and obviously the transactional fees. But it's probably amongst the more affordable products people can take for non-mortgage loans.
Interesting. Can you give me a specific success story around one of your clients at all, or multiple?
Sure. So I think there's obviously always different good examples, but we had a client, Imani, in Kenya, who basically used the loan to start a small shop. Initially sort of off a stand at the side of a street, and successfully started servicing that loan, and has been able to actually upscale that loan, and eventually started a small shop in a shopping center. There's been different clients that were able to send their kids through school on the back of the loans. There's obviously always medical emergencies. We basically do surveys once in a while to just get further feedback. I think a lot of the feedback that we get unsolicited is obviously where our loans help to address a medical or an educational emergency, because it was something people really felt powerful, on a personal perspective from needing. So those are nice to read, because they're referrals where you really impact someone's life on a personal level. That being said, I think from a macro perspective, the SME use case is even more exciting, because effectively it becomes a snowball effect, right? In as much as an education loan is productive, because the next generation will be better to be employed, where we can fund people and they use it to do a small business or an MSME, that itself again creates more employment and economic capacity and further loans and growth. So that's probably the most exciting to us.
That's awesome. No, thank you. Now, given that Bitcoin is the official currency of the Central African Republic, do you leverage cryptocurrencies in any way?
No, so for us, at the moment, we don't. It is on our outlook. Within our footprint, we don't have any, currency countries where crypto is heavily supported yet. Within our outlook, we do follow it. I think the use case for crypto for remittances is extremely powerful, and definitely something we'll look at as add-on products in future. In the lending space, I think the biggest problem in crypto is that ideally a currency and it should be stable. And obviously, crypto so far, especially over the last 12 months, hasn't really been stable. And you can't really use something as a currency and then it's goes from 1 bread to 0 bread in a couple of days. So that to me is where I still see struggles, but we see a lot of value in the applicability of technology and the decentralization of it to allow smoother, remittances across country and higher operating efficiencies.
Awesome. No, thank you. That's awesome. Now, where do you see FINCLUSION in the next 5 years?
So for us, 5 years from now, we'd like to build $1 billion loan book from the 20 million today. Realistically, that probably means we'll want to be in 8 to 10 countries so that we can build about $100 million loan books in each of the markets, which I think should make us a top 3, retail MSME financier in each of these markets based on expected economic growth. I think if we achieve that, we'll see it a success. And ideally, we'll pair that with having full service licenses in all of these markets so we can do, we can ensure we can give people access not just to loans, but also bank accounts, cards, and insurance.
Do you have any interesting new products on the horizon?
So we're looking at a couple of things. We basically, most importantly, recently launched our ability to make payments directly off our loans, both in Kenya through M-Pesa as well as in South Africa. That's been the biggest evolution at the moment. As we push forward, I think, we're going to come out with a couple of interesting insurance products where we're working on something to better able to give people access to a wide range of insurance and manage their claims more efficiently. So those are probably the 2 things we're really going to be pushing most in the near term.
When you say insurance, do you mean health insurance, car insurance, all of it? House insurance?
All of it, actually. So all of it. Well, mainly car, health, and life, to be honest. So life's traditionally the easiest, but even health in general, we won't be taking the insurance risk. We'll be doing this as a brokerage. But I think there's a lot of potential to actually start pushing insurance inclusion in the African markets, which over time, I think is a big benefit to people because it protects them, from the unforeseen things in life. Yeah.
Awesome. No, thank you. And can you explain to me, how does wage streaming work?
Sure. So wage streaming for us is a smaller solution. We offer it just to be helpful to employees. But effectively, a lot of salaries in Africa are monthly, but people spend is weekly. So people can actually draw down an advance on their salary towards the end of the month against a small fixed fee that then just gets deducted off salary. So in as much as we offer that and allow it for employers to help their employees get across the month, it doesn't really create wealth. It's more of an emergency measure. So it's a good product in our suite to have, but it's not where we see most of the growth because you're effectively helping someone 1 month, but next month, they're almost forced to pull their salary forwards, on a monthly basis. So really what you've done is you've translated what was previously a monthly cash flow into a weekly cash flow, making it easier for people to manage their financial affairs. But really to change people's lives, I think it needs to be paired with installment lending that truly creates capacity in people's financial situation.
Awesome. And do you see FINCLUSION ever expanding outside of Africa at all?
Not for the unforeseen time, but never say never, I guess. It's, we're very excited about the opportunity. What I do see us doing at the right time is going beyond East and Southern Africa into West Africa and North Africa, as well as Francophone. But I think getting Africa right is going to be, So in the interim, I think our focus for the next decade is really building out Africa. We see huge potential in West Africa, North Africa, and particularly Francophone Africa. So I think before we go outside of Africa, we'd really focus on getting Africa right. The one thing where I would eventually see us moving outside of Africa is potentially pursuing a listing in either New York or London to really access to international capital markets once we scaled up the business. Because I think that would be, the right platform for, a big African group truly addressing the African financial services gap.
Awesome. Well, do you see yourself ever going to the Middle East or any of those parts of the globe?
Not right now. I think the opportunity we have in Africa is big enough, but perhaps in future we would see ourselves going to North Africa, so Egypt and surroundings, which I guess starts to get closer to the Middle East.
Yeah. Awesome. That's all the questions I had, Tim. Did you want me to ask you anything specifically?
No, thank you so much for having me.
No, thank you.
I think the more attention we get for fintech on the African continent, the better it is. Absolutely. I think we're very excited about the opportunity and about the commitment to growth. So yeah, really appreciate it.
No, thank you. Thank you for being here. Yeah. So sorry about the connection.
No,
issues.
apologies for the connectivity drop.
No, it's
sorry.
Yeah, have a wonderful weekend. Happy Friday.
Thank you very much. Same to you, and yeah, really appreciate your time.
Hope we talk again soon. Yeah. Bye, Tim.
Bye.
And if you enjoyed this video you just watched, please hit like and subscribe. And be sure to stop by techtime.com for the latest in news about tech, science, business, and so much more.